It was a quiet day on Wall Street where once again we failed to get to a brand new all-time high on the S&P 500. We're still about 1% away from that. We finished lower today by 0.2%. We did have some positive news to start the day as initial unemployment claims came in below 1 million claims for the first time since March. On the other hand, we were dealing with some corporate earnings announcements that weren't quite as rosy. In particular, Cisco Systems stock was down significantly, about 11%, based upon their forward-looking guidance. So that kind of threw a wet blanket on Wall Street here today. We'll take a look at all of that, see what it means for our posture. We'll then get into our trade application example in a stock that has caught the eye of a billionaire investor here recently, and we'll see if it has a little bit more room to run. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 13th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, check out our description area where you can sign up for our email distribution list. In addition to that, we're heavy users of Twitter. Make sure you're following me at Brandon Van Zee. And we appreciate those of you that click like and retweet to let us know that you'd like us to do these videos as often as possible here for free on YouTube. And then lastly, we do have a presence over on Facebook as well. You can see the web address embedded in the logo there in front of you. All right, let's jump into our behavior here, or the action of the market today. And you can see I've got chart 4B pulled up here in front of us. S&P 500, as I mentioned before, down 0.2%. Dow Jones Industrial Average down 0.29%. Remember, that's where you're going to see a little bit more of an impact from Cisco that I mentioned before. Remember, there's only 30 stocks in the Dow, and although Cisco is one of the smaller price stocks, because it is one of only 30, it's going to have a little bit of a heavier weighting upon the Dow than some of the other areas. The Nasdaq Composite was actually up today, so good to see a little bit of a rebound in some of those technology-oriented companies in the last couple of days after the 3 straight days of sell-off that we had experienced prior to that. So a little bit of a bounce back there for some of those names. And then the Russell 2000 small caps were down 0.22% here today. Now you'll notice that despite 3 out of these 4 indices closing lower today, we still have bullish postures across the board. So these have not been violent sell-offs by any means. There's just little dribs and drabs here and there when you do have a sell-off day. And so for the most part, if you kind of take the 10,000 foot view, you look at the charts and you see that they're all still above rising 30-day moving averages, which is why those moving averages there on the charts in front of you are all green. Prices above rising moving averages. Path of least resistance continues to be to the upside. Now, as you're looking at that, you might be able to spot some differences here and there. And as I mentioned a moment ago, the Nasdaq had 3 straight days of sell-off here last Friday, this Monday, and Tuesday. So we're still not quite to the high that we set on the Nasdaq on the 7th, whereas some of these other indices have had recent highs a little bit here more closely to where we're at today. So like for instance, yesterday S&P 500 hit a new multi-month high. Again, not an all-time high, but a multi-month high. And it was 2 days ago on the Dow Jones and 2 days ago on the Russell 2000. So for the most part, it's all systems go. I did want to point out that in a couple of the cases, we do have what's known as bullish intermediate confirmation signals. Now remember, I mentioned that very signal on Tuesday when we were talking about the Nasdaq Composite. On that day, we had the red line in the lower reversal zone, the green line in the upper reversal zone, and I even said it was a more ideal setup than typical because the blue line was between 20 and 50, and lo and behold, we've had 2 straight up days since then. So for those of you that were brave enough to take the buy the dip signal in that case, good work there. In the case of the Dow Jones and the Russell 2000, we have those types of similar situations again, but there is one difference I'd like to point out. So first of all, notice the green line in the upper reversal zone, red line lower reversal zone on the Dow, and down below, green line in the upper reversal zone, red line in the lower reversal zone on the Russell 2000. But notice the difference in the blue lines in both of these. With the Dow Jones, the blue line is up here at 62, so it's not below 50. down below on the Russell 2000, you'll see that the blue line is at 32. So it is between 20 and 50, making it a little bit more of an ideal signal for that buy the dips. So we'll see if that plays out or not. One thing I did want to point out regarding that conversation about the Russell 2000, which of course does track small caps a bit more, is over here on the internet, one of the things that we noticed in my factor-based swing trading class that I taught yesterday is that the small size stocks have started to catch a little bit of a bid here recently. So they're starting to emerge as a potential leadership group. They actually supplanted Momentum up there at the top ranking. Momentum had been number one from a factor perspective going all the way back to June 23rd. So that was a long stretch of time there, about a month and a half, where nobody could really vie for contention with Momentum. And then all of a sudden, we did see a number of those high momentum stocks like your Teladocs and your Zooms of the world start to fall a little bit late last week and early this week. And so it did have a little bit of a shakeup on the overall factor selector rankings there. So we're going to keep our eye on that. We don't want to completely write off Momentum, because as I was telling my class, more times than not in recent years when momentum has fallen just a little bit, the temptation has been to write them off and to assume that we're going to enter into a new world where momentum no longer works. But more times than not, momentum has come firing back. So we'll see if that is the case once again this time around. And then we also had low volatility kind of ratcheting down to the last place position there on the factor selector. Also, while we're over here, wanted to say thank you to those of you that clicked like for me on Twitter the last time we did this video. On Tuesday, 115 of you stepped up to click like. Remember, if you want David and I to do these videos on a daily basis for free here for you on YouTube, that's all we ask of you, is just click like for us. We think it's a pretty good trade-off for you. Remember, it takes 2 or 3 hours out of our day to prepare and to look for trades and to do the recordings and do all the editing and then send all the notifications. That all takes time. And David and I's time is precious. It is valuable. And so we want to make sure that if you guys are getting benefit out of these free videos where David and I don't make any money, but you're getting 2 or 3 hours out of our day, that you have some sort of a response to that. And the best and easiest way for you to thank us would be to click like for us there on Twitter. Remember, you can do that directly on our website by clicking this heart down below. You can also go over to Twitter, where you can see our market outlook posts usually pinned to the top of our timeline. We also put the link in the description of the YouTube video, and then we also put it in the email that we send out from a notification perspective. So there's really 4 different ways to make it nice and easy for you to click like for us there on Twitter. So thank you to the 115 people that did that for me last time around. I always try to get up and over 100. You guys were able to fulfill upon that, so thank you. Back on over here to the Thinkorswim charts, I wanted to pull up, since we were talking about factors, let's also bring up the 6 grid here. This is the chart 3D for those of you that are premium market scholars who have access to the 50 different charts that David and I use and want to follow along with us here at home. You can see that 3D will show us the 6 different factors and kind of give us a sense of how each of the factors are doing. And one thing I wanted to point out is that momentum had slipped 3 days in a row, but for the last 2 days they've actually risen, and momentum was the leader today. And remember, there's a number of software as a service stocks that are currently part of the momentum factor. And so if you think about what we just discussed here a moment ago when we were looking at the various indices, the Nasdaq Composite was the only one out of the 4 that was up today. So I guess we shouldn't be all that surprised to learn that momentum factor was the only factor that was up today. All 5 other factors were down here today. Now, having said that, the one that I wanted to point out in this case was the value factor, because there's been a lot of chatter about value versus growth here recently, and value started to emerge as kind of an interesting catch-up type of a trade here in the last couple of weeks. You can see this big response from basically July 31st to August 11th. We made some big headway there, a big stride higher in the value factor. The last couple of days we've sold off just a little bit, But I did want to point out that we do have what's known as a bullish intermediate confirmation signal on the value factor right now as well. In other words, a buy the dips signal. We have the green line in the upper reversal zone, we have the red line in the lower reversal zone, and we have that blue line between 50 and 20, so this would be considered a more ideal bullish intermediate confirmation signal. So if you're going through a bunch of charts tonight, look for those value stocks. Many of them may be showing you that signal on an individual stock basis. For instance, the value factor right now is chocked full of financial stocks. So think about your banks and other big financial services companies. If you're looking at them, you might be able to discover some bullish intermediate confirmation signals there that you might be able to take advantage of as well. Let's go ahead and take a look at another chart here. Let's look at the three green arrows chart for the overall market. And here you can see we do have three green arrows in 3 out of our 4 charts in this particular case on chart 4D. And the only one that is missing is the same one that was missing on Tuesday when I last did this video, which is the Nasdaq Composite. You'll notice that we still have a red arrow right there on the MACD histogram. And so we're waiting for a little bit of a recovery there. The last 2 days have helped the Nasdaq's case. You can see that the if I were to right click and maximize the cell here, you can see on the MACD histogram that after producing this red arrow the last 2 days, because price has gone up, it has been enough to push the MACD histogram bars back toward the 0 line. And notice those bars are gray right now as opposed to red, meaning that they are declining or reverting back to the mean. In other words, we might very well be able to get a green arrow out of the MACD histogram, potentially tomorrow, probably not tomorrow, but next week, early next week could be a much more realistic possibility for us to get back to 3 green arrows even on the Nasdaq itself. Let's go ahead and now take a look at the 1040 crossover method. And you can see that we have a clean sweep. That was the latest news was the Russell 2000 just last week gave us our bullish crossover. Some of you will refer to that as a golden cross. In this case, when we use a weekly candle chart like we do here on chart 4C, the orange line represents the 10-week moving average and the blue line represents the 40-week moving average. So when the more sensitive line, in this case the 10 period, crosses up and over the 40 period, we get that bullish crossover, and you can see the background color of the chart has flipped from pink to green, and that is generally viewed as a positive sign for the overall market for those of you who needed a little bit of extra nudge. I think most of you have already been bullish on the markets, or at least I hope you have. But last but not least, the Russell 2000 did complete the cycle and joined the other 3 indices that had done it quite some time ago. All right, let's now get into a little bit of 12 grid analysis. Starting off here with chart 5A, the asset class 12 grid. Reminder that the background colors of these charts will tell you whether the intermediate term posture is bullish or bearish. If the background color charts are green, they are bullish intermediate postures using the market forecast technical indicator. And if the background colors are red or pink, it means that they are bearish intermediate postures. So starting in the lower left-hand corner here, you can see we got all of our pink charts bunched up. And they do look a little bit different and worthy of distinction. Notice that the UUP, so this is the US dollar versus a basket of other foreign currencies, continues to be in a pretty ugly downtrend. This is something that has been driving a lot of price action across multiple financial markets. Today, the US dollar was down yet again, and we're still below that falling moving average in that particular case, along with having the intermediate line actually in the low reversal zone here. You'll see that it's at 17. So although it's rising, remember, anytime it's below 20, we would consider that strongly bearish. Now, if it can rise from 17 to, let's say, 21, that's a different story. The background color of the chart would then shift to light green. But at this moment in time, the trend continues to be lower highs and lower lows, red moving average, and a strongly bearish intermediate posture according to the market forecast. We also see a breakdown here in long-term U.S. Treasuries and foreign bonds. So the fixed income markets are struggling here a little bit. This is a continuation of what I was mentioning to you guys on Tuesday. Remember, Tuesday was this big day where out of the blue, interest rates in the United States just spiked. And they have continued to spike since then. So, of course, most of you understand the relationship between bonds and interest rates. Bonds go up, interest rates go down, and vice versa. So naturally, if interest rates were spiking here over the last week, it makes sense that something like TLT, which tracks the long-term U.S. Treasury bond, would be going lower, and that is the case. So in those cases, it's a little bit different than what we saw to the U.S. dollar. Remember, the U.S. dollar had been stuck in a consistent downtrend for the last 3 months. Long-term treasuries had actually been in an uptrend until a week ago, and then they just fell out of bed, and the same thing can be said for foreign bonds. So that's a little bit of a change of pace. Notice the difference there in the moving average colors, green to yellow, versus this one down below here that's been red consistently this whole time. So we'll see if it can kind of stabilize here. You usually don't have a situation where you have a straight up move followed by a straight down move. So I would assume that there will be some sort of a support level that will establish here sooner rather than later on TLT. But then the question will be, what will happen if we get a reversion to the mean type of a bounce? If it comes back up to this moving average, uses it as resistance, and pushes back down off of it, then we might be able to establish a longer term downtrend. So we'll keep our eye on that story and keep you posted in these videos. Last but not least, you'll see gold also has a pink background color chart. Although when I look at this chart and I compare it to these other 3 pink charts, it's like night and day to me. You look at the US dollar to the left, again, downtrending 30-day moving average. Compare that to gold. Uptrending moving average. That moving average has been green really since going back here the first week of June. In addition to that, price is actually bouncing for gold. Notice that gold was up 2% today, more than 2% today. And you could actually make the claim that you had a close above the high of the low day. Yesterday was the low day. Today you closed above yesterday's high. That's a good sign, particularly since it's happening right around that rising 30-day moving average. So for those of you looking to kind of reload your gun, so to speak, that may be an opportunity. And that reminds me, when I did the video on Tuesday, remember I did a bullish trade on silver. That was after this day. So I do the videos at night after the market is closed. Yesterday, the stock market, or in this case, the silver popped higher, and it continued to pop higher again. So some of you will recall that I said those of you that will be more ambitious than me might be just buying silver outright right there. Because it was basically coming down to that area. We had a bullish intermediate confirmation signal, and this area that it stalled at was the prior breakout zone. I wish I could take back time and have gotten a little bit more aggressive with that myself instead of choosing to sell the put, particularly the way that things shook out, which is we didn't get filled on that trade. Remember, we were trying to sell the $18 put at 18 cents, and because the silver market bounced the very next day, we didn't get filled, and it continued to bounce away from where we want it to go here for us as well. So that's a frustrating experience, right? When I'm doing these videos after hours, not knowing what's going to happen the next day. Sometimes we have perfectly good trades that don't go through simply because the market is already in agreement with us before the market opens and therefore bounces away from the price we want to get filled at. I have been thinking about maybe placing the market outlook trades during the trading day as a result of situations like this, and then posting it to those of you that are premium market scholars on our Telegram app. Many of you are aware that with the 8 different trading rooms that David and I teach for our premium members during the week, we use the Telegram app to send out trade alerts whenever any trades get executed in our trading room accounts. I hadn't been doing that for the market outlook video, but with a situation like this with silver and not getting filled when we probably should have, if I would have just did that trade 10 minutes before the market closed, as opposed to putting in an after the market and then sending out the telegram, we would have been in better shape from that. So let me think about that a little bit. My day is quite busy, as I'm sure you can imagine, but perhaps I'll be able to kind of rearrange my schedule a little bit, at least get the trade done, send out the telegram notification to those of you that are premium market scholars, so that way if you wanted to examine the trade before the market closed, you could do that as well. So let me think about that a little bit, and I'll keep you premium members posted if that becomes a possibility down the road. But anyway, great bounce there out of silver since we just talked about it a couple of days ago. It was up another 9% here today. So the bullish intermediate confirmation signal on silver worked out beautifully this time around. Anyway, as we look at some of these other charts here, most of them, as you can see, are in the green. And the ones that look like they're the best trends are all on that top rung. So the S&P 500, developed foreign stocks, emerging foreign stocks, and even preferred stocks all look like they are continuing their uptrends. Let's go ahead and now take a look at another set of 12 grids. In this case, we're going to go to the U.S. sectors 12 grid. And here you can see that we now have one bearish posture on the board. This is chart 5C for those of you that are premium members following along at home. And the chart that has the light pink background color in this case is in the lower right-hand corner, and that is real estate. Real estate fell today. In fact, it was down over 1%. Part of that might have been due to that interest rate sensitivity with interest rates going up again today. Perhaps it put a little bit of additional pressure there on real estate. But anyway, you will see that it is still above a rising moving average, so that's a promising sign. But this is more of a meandering chart, right? There are certain charts that look strong. There are certain charts that are just meandering, and I would call real estate meandering. Now, the good news is I wouldn't call it plunging, right? Even though it has a weekly bearish posture, I wouldn't say that this is a chart that I would be aggressively shorting or anything like that. We haven't broken any major support levels. We're just trying to figure things out and biding our time. On the other hand, there are plenty of charts that do look quite strong, including up here in the top. You can see communications was the best performer here today. It was up 0.5%. Some of those video game companies doing nicely today, I noticed. We own a number of them in my top-down trend trading class. So good to see communications continuing their nice strong push higher here from a sector perspective. We also saw technology do reasonably well today. It was the only other sector that was up on the day. And you can see that that is still a strong chart. Despite those 3 sell-off days we experienced here in the last week, this continues to be a very strong trend from an intermediate perspective. We also see that consumer discretionary has been off to the races. In fact, we took a swing trade on a consumer discretionary stock yesterday in my factor-based swing trading class that has been really performing nicely for us right out of the gate. It's a consumer outdoor goods type of a company and is setting up with a really nice bounce pattern. So for those of you that are premium and plus members, you might want to check my recording from yesterday's swing trading class if you're interested in that particular setup. But it's looking very nice at this point. And then also I wanted to point out industrials and materials. Both of those companies both of those sectors are considered very cyclical. In fact, we had that discussion today in my question and answer session for those of you that want my opinion on the difference between industrials and materials from a dividend growth investing perspective. I would encourage you to watch the recording for my Q&A class today. But anyway, both of those cyclical areas are right now firing in all cylinders. We have very nice trends established there. I noticed that 3M had some positive commentary today as an example of one industrials company, but we've also seen companies like UPS surging higher here recently, stocks like Caterpillar and Deere and even Emerson Electric, Fastenal, Grainger. A lot of those industrial dividend growth types of companies have all of a sudden come to life here. So keep your eye on that particular area of the market as well. One other quick note, I wanted to point out the financials up here continue to have a strongly bullish posture with the intermediate line up there at 89th percentile. I'm mentioning that one specifically because that leads us into our trade application example for the day. So for that, I wanted to come on over here to chart 4A, which is just a normal market forecast 1 grid. And remember that the 13F filings for a lot of big hedge fund managers are going to start coming out in a big way. Some of them might already be coming out tonight, but many of them will come out tomorrow because they are due 45 days after the end of the quarter. And so that's the 15th of August, and with yesterday or with tomorrow being the 14th, but the last business day before the 15th, I would anticipate seeing a lot of commentary regarding what the big hedge fund managers and other institutional fund managers are doing with their portfolios. And of course, one that I keep my eye on very, very closely is Berkshire Hathaway, as I'm a big Warren Buffett fan. And many of you have probably heard that he has been really loading the boat up with Bank of America here recently. In fact, with tomorrow's 13F filing, when they talk about what stocks they've been buying and selling over the previous quarter, I will be curious as to the transition of the banks over at Berkshire Hathaway. The quarter before, we saw a little bit of a boost to the position in PNC. And so that was a bank out there in Pittsburgh that Buffett actually owned a couple of decades ago as well, but looks like maybe establishing a new position here more recently. So I'll be curious if he adds to that position. And then also, I want to see what happens with Wells Fargo. There's kind of some rumors floating around that it's possible that Warren Buffett's patience with Wells Fargo has been growing a little bit thin, and there's some rumors going around that perhaps he's actually been liquidating his holdings there. So I want to see if that ends up being the case tomorrow. And instead, it looks like there's a new bank that is his bright, shiny object that is capturing all of his attention lately, and that is Bank of America. He was buying Bank of America every day for like 12 or 13 days in a row here more recently. And that was part of the reason that you saw Bank of America's stock come here from about 24 up here to about 27 in the last 2 or 3 weeks is the support of Warren Buffett, who of course have been doing very well with his Apple position recently, but not so good with a lot of his other holdings, including all of his banks. But all of a sudden, he has gotten permission to become an owner of more than 10% of Bank of America. And that is something that has not been common for him, to be a 10% or more shareholder of a large bank. So he had to get special permission for that, and it gives you a little bit of insight as to his motivation to continue to add to that particular company. So it's had a nice bounce here after all of those buys by Berkshire Hathaway here recently. And the reason it's catching my eye here today is we have sold off for the last 2 or 3 days in Bank of America, but it is setting up one of those bullish intermediate confirmation signals. Green line is in the upper reversal zone, red line is in the lower reversal zone, and the blue line finished today between 20 and 50. The blue line finished today at 23, so it might even be considered a little bit more of an ideal candidate for that. So I'd like to take a bullish trade on Bank of America, especially going into the 13F announcement that we'll expect to hear tomorrow afternoon. So let's go ahead and come on over here to the trade tab. And I've got the September monthly contracts pulled up here. And I'm going to do another one of those sold put opportunities. And as I explained last time, I like to look for the 1% return on risk when we're looking for those sold put opportunities. So that leads me to the 23 put in the month of September. So in other words, I've got to be a willing buyer of Bank of America stock at $23 per share, but it's currently trading at 26. Now look at the chart and you'll see 23 is way down here. So in other words, if you would have looked back at the chart and said, boy, I should have been buying Bank of America back here when it was a $23 stock in the middle of July, well, then this is a trade that maybe you can kind of mentally get behind, because it's basically saying, okay, if you could turn back time and buy it back there, here's your opportunity. And if that doesn't happen, then at least you get to collect that credit up front to keep in case it goes higher from here or sideways or just a little bit lower but not below 23. So let's go ahead and place that trade. I'm going to click on the bid price here. Let's just go ahead and do, 5 contracts in this case. And we will leave it at 23 cents, so a $23 put trying to get 23 cents for it, and I will put this one in as a good till cancel order here as well. So confirm and send. We'll try to take in about $115 to say that we would be willing to buy 500 shares of Bank of America at 23 in the middle of September if it does continue to fall between now and then. So let's go ahead and send that off, and we'll see if we can get filled first thing in the morning. Thanks for joining me here yet again tonight. Remember, if you got value out of this presentation and you want to see David and I do these videos as often as possible, we would encourage you to click like on Twitter to let us know that you'd like to see those free videos. If you don't want to see them, obviously you don't have to do anything. We'll get the hint eventually. But we're hoping that you guys do get some value out of the time we spend with you here during these videos, as in addition to all of the other sources of market commentary that you receive. We'll see what tomorrow brings. Remember that we're 1 week away from the monthly August options expiration, so make sure you're tightening up your risk management on those contracts as well. And tomorrow I'll be teaching my options for long-term investors class in the morning. David will be teaching his technical analysis class in the afternoon, and then be doing the market outlook video tomorrow night for you. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.